The art of scalping attracts traders for the same reason fire attracts moths. It promises speed, control, and immediate reward. And it delivers all three just long enough to make you forget how unforgiving it really is. I've watched scalping seduce some of the smartest people I've ever met, not because they were greedy amateurs, but because they underestimated how much psychological precision this style demands. Scalping is not just fast trading, it is compressed risk, compressed emotion, and compressed consequences. And when everything is compressed, mistakes don't arrive politely, they arrive instantly and repeatedly. Early in my career, I was drawn to scalping because it felt efficient. No overnight risk, no waiting, no long explanations. You're either right or wrong within minutes, sometimes seconds. During the late 90s, when liquidity was deep and volatility was generous, scalping felt almost surgical. You could step in, take a few ticks, step out and repeat. Wins stacked quickly. Confidence followed. What I didn't understand yet was that scalping doesn't reward accuracy as much as it punishes hesitation. You don't need to be right all the time, but you must be decisive all the time. And that distinction matters more than most people realize. The first hidden risk of scalping is that it trains you to equate activity with productivity. When you're clicking constantly, it feels like you're working, like you're engaged, like you're in control. In reality, the market only pays you for selective participation, not constant participation. Scalping blurs that line because opportunities appear frequently, but not all opportunities are worth the same risk. Over time, many scalpers slide from precision into overtrading without noticing, because the losses come in small bites that feel manageable until they suddenly aren't. Another danger is emotional whiplash. Scalping delivers feedback at a brutal pace. Win-loss, all within minutes. That rhythm taxes the nervous system in ways longer-term trading doesn't. You don't get time to reset emotionally between decisions. If you're even slightly tilted, slightly distracted, slightly tired, scalping will expose it immediately. I've seen traders with solid strategies implode simply because their emotional recovery couldn't keep up with the speed of decision-making required. Liquidity is the lifeblood of scalping, and this is where many people misunderstand the risk. Scalping works best when spreads are tight, order, books are thick, and execution is predictable. In those conditions, small edges can be harvested repeatedly. But liquidity is not constant. It changes with time of day, news volatility regimes, and market structure. When liquidity thins, scalping doesn't just become harder, it becomes dangerous. Slippage turns small losses into large ones. Stops get skipped. What worked flawlessly yesterday quietly stops working today. And if you don't adapt instantly, damage accumulates fast. One of the biggest mistakes I made early on was treating scalping as a technical skill rather than a physiological one. Your reaction time, focus, and emotional regulation matter as much as your setup. Scalping is demanding in a way that doesn't show up in backtests or screenshots. You can't be half present. You can't be multitasking. You can't be emotionally preoccupied. Every lapse shows up in the P&L almost immediately. That's why scalping is often sustainable only in short bursts, not as a lifelong default for most traders. Risk management in scalping is also deceptive. Because targets and stops are small, it's easy to justify larger position sizes. That leverage is what creates the illusion of easy money, and it's also what makes scalping lethal when conditions shift. A single execution error, a single spike, a single moment of hesitation can erase dozens of successful trades. Scalpers don't usually blow up in one dramatic moment. They bleed out through friction, slippage, and fatigue until discipline finally cracks. I learned this lesson painfully during periods when volatility compressed. Trades that once resolved quickly started stalling. I stayed active anyway, telling myself I was being adaptable. In reality, I was fighting the environment. Scalping requires not just skill, but humility. The humility to know when the market is no longer offering the conditions you need. The hardest skill in scalping is not entering quickly. It's stopping entirely when your edge disappears, even though the screen is still flashing and the temptation to trade is constant. There is also a psychological trap unique to scalping the illusion of control. Because you are in and out quickly, you feel insulated from larger market forces. You feel like you're skimming from the surface rather than swimming in the current. But currents still matter. Regime changes still matter. Macro events still matter. Scalping does not exempt you from the market's larger structure. It just delays your awareness of it until a move is fast enough to overwhelm your reaction time. Despite all this, scalping is not inherently bad. In the right hands under the right conditions, it can be a powerful expression of discipline, focus, and market reading. The traders I've seen do it well were not adrenaline junkies. They were calm, almost boring, intensely selective. They traded fewer sessions than most people think, avoided low-quality periods ruthlessly, and treated scalping as a professional craft, not a thrill. They understood that fast profits come only to those who respect fast risk. And this is where the real conversation needs to go next, because understanding that scalping is fast and risky is not enough. The real question is whether it fits you, your temperament, your lifestyle, and your ability to sustain extreme focus without emotional leakage. And if it does, how to structure it. So speed does not turn into self-destruction. And if it doesn't, how to recognize that. Before the market teaches you the lesson expensively, and that transition from fascination to honest assessment is exactly where we need to continue next, as this sentence carries forward into how to evaluate whether scalping is a viable path for you and what non-negotiable rules must be in place before you ever attempt to extract fast profits from a market that punishes hesitation and overconfidence without warning. And that is where we pick up next, as we move from understanding the danger to deciding intelligently whether to engage with it at all, and under what conditions you should walk away even when the screen is alive and your instincts are screaming to stay in just a little longer. Because that moment is where scalping either becomes a disciplined craft or a fast track to burnout and loss. And that is where we continue next, by forcing an honest reckoning with yourself before the market forces one on you. Because scalping does not forgive self-deception. The first question you must answer is not whether you can spot setups, but whether you can sustain intense focus without emotional leakage. Scalping demands presence the way a surgical procedure does. You cannot be tired, distracted, frustrated, or chasing something outside the screen. If your attention wavers even briefly, execution quality collapses, and in scalping, execution is the edge. Many traders fail here, not because they lack skill, but because they underestimate how exhausting it is to make dozens of high-stakes decisions in rapid succession without losing composure. The second test is emotional recovery speed. Losses in scalping are small, but frequent, and wins are small, but seductive. If a loss lingers in your mind for more than a few minutes, or a win makes you feel invincible, scalping will magnify both reactions until discipline breaks. You must be able to reset instantly trade after trade without trying to get it back or press the advantage. This is not a personality flaw if you can't do it. It's simply a mismatch. Scalping is not a place to work through emotional issues. It is a place where unresolved emotions are exposed and punished. Then there is the question of environment, which is non-negotiable. Scalping only works in specific conditions: deep liquidity, predictable behavior, and stable execution. You must know when you are allowed to scalp, and just as importantly, when you are absolutely forbidden to. News releases, thin sessions, regime shifts, and volatility compression are danger zones. Professional scalpers trade fewer hours than most people think. They wait for the right windows and do nothing outside them. The discipline to stop is far more important than the ability to start. Structure is what keeps scalping from turning into gambling. You need hard rules around maximum daily loss, maximum number of trades, and mandatory breaks after drawdowns or winning streaks. These are not optional. They exist to protect you from tilt fatigue and the illusion that one more trade will fix everything. In my own scalping periods, I learned to walk away after hitting a predefined profit or loss threshold, even if the market was still moving. Staying longer rarely improved results and often destroyed them. Position sizing deserves special respect. Scalping tempts you to size up because stops are tight and targets are small. This is where many accounts quietly die. The math looks safe until slippage latency or a sudden spike turns a controlled loss into something much larger. Conservative size is not weakness in scalping. It is survival. If you feel adrenaline in your sizing decisions, you are already in trouble. One of the healthiest realizations I ever had was that scalping does not need to be a permanent identity. For many traders, it works best as a phase away to sharpen execution, learn order flow, and develop discipline under pressure. Later, that skill set can be applied to slightly longer horizons, where the same clarity exists without the same physiological cost. There is no shame in outgrowing scalping. The mistake is clinging to it, because it once worked, or because it feels exciting. Looking back, the traders I respect most who scalped successfully were not the fastest or the loudest. They were the most restrained. They traded less than they were allowed to. They stopped early. They treated scalping like a professional craft, with strict boundaries, not a way to feel alive in the market. When conditions weren't right, they didn't complain, they disappeared. And that's the final truth about the art of scalping. Speed is not the edge, restraint is. Fast profits are possible, but only for those who respect how quickly risk compounds when discipline slips. If this lesson resonated with you, I invite you to subscribe to the channel so you can keep learning from real market experience rather than romanticized speed. And leave a comment sharing whether scalping has ever tempted you or burned you. Because understanding that relationship honestly is often the difference between using speed as a tool and letting it use you.